I think that if you're actually an individual, you're using Bitcoin right now, you're one of the early pioneers. If you keep it, you'll be insanely rich. If you take money off the top or you sell it, then you'll remember that you used to have billions of dollars of Bitcoin, but you sold it for Ferrari, and that will be unfortunate. But and so I think that there'll be some OGs that will still be heavily engaged. But I think ultimately, Base Network is going to have 10 to 100,000 big financial institutions that are going to be settling large amounts. Every company, look, every family on Earth should adopt the Bitcoin standard. What is that, 1 billion families?
Yeah.
Every person on Earth should adopt the Bitcoin standard.
Michael Saylor, CEO of MicroStrategy and one of Bitcoin's most vocal advocates, has just issued a stark warning. Forget the hype cycles and short-term price surges. What's coming is far more serious. Saylor believes we're approaching a critical inflection point, one that could leave unprepared investors permanently sidelined. His message is clear: act now or risk missing out on the largest wealth transfer in modern history. According to Saylor, Bitcoin isn't meant to be used like digital cash for daily purchases, it's digital capital. Think of it as digital Manhattan real estate or a Picasso painting, a scarce, long-term store of immense value. Trying to make Bitcoin function as a day-to-day currency is a fundamental error. That's the role of fast, elastic tools like dollar-backed stablecoins. Bitcoin, in contrast, is the savings account for the next 100 years, the solid foundation beneath everything else. Confusing the two, Saylor warns, is a costly mistake. He goes further, predicting the decline of weak fiat currencies. As inflation eats away at currencies like the Egyptian pound or Nigerian naira, some losing value at rates of 14%, 30%, or even more annually, demand for dollar-pegged stablecoins is surging. But beyond that, Saylor sees capital ultimately flowing into Bitcoin as the final destination, the true store of value. The US dollar may remain dominant for transactions, but Bitcoin will become the reserve asset that supports it all. Ignore this shift, he cautions, and you're not just falling behind, you're locking yourself out of the future. Cybercriminals are getting smarter, and everyday investors are the new target. You worked hard for your crypto. Don't lose it to a scam. Recently, attackers bribed offshore agents at major crypto platforms, stealing names, birth dates, even social security numbers. They drained real accounts in seconds. No blockchain hack, just human error. Once it's gone in crypto, it's gone. That's why ITrust Capital created the Premium Custody Account, the most secure way to protect your asset. It's a closed-loop system, meaning funds can only move between you and your account. Even if someone gained access, they can't steal your crypto. Backed by institutional-grade custody at no extra cost. Sleep easy knowing your investments are locked down. Click the link, use code DOSE7, and get a $100 funding bonus. Start protecting your future with ITrust Capital.
I think in the modern world, the best conception of money is that money has a medium of exchange component and it has a store of value component, and you have a unit of account for the store of value and a unit of account for the medium of exchange. So the right metaphor is just think of the dollar versus BTC, or checking account versus savings account. And so you're going to have sort of high speed dollar type instruments to price things in day to day. And then you're going to have another capital asset that you're going to use to store your value over the course of 100 years. Like, I don't run a country, so no one's asking me, but I think it would be a mistake to try to establish a currency with a capital asset. For example, you don't really want to price all your sandwiches in New York City real estate. Nor do you want to price your sandwiches in ounces of gold, nor do you want to price sandwiches in Picasso paintings. I think that you've got capital and you've got currency. Bitcoin is capital. It's digital capital. It's not digital currency. I think a stable coin, the dollar, is digital currency, like Tether. And you've got weak currencies and strong currencies. And a weak currency is the Bolivar or the Naira, like something which is inflating at 14% a year or 30% a year. I think you've got strong currencies that are inflating at 7% a year. And then you've got capital, which is not inflating at all. Bitcoin is capital. It's not a strong currency. It's not a weak currency. It's a capital asset. I think that that you have a few currencies that are kind of pegged to the dollar that are struggling on, and I think you have a lot of currencies that are collapsing against the dollar, and then you have the dollar. And so if the stable coins succeed, and they're going to succeed, if the U.S. Passes the Genius Bill, and then U.S. corporations and banks are able to issue stable coins backed by U.S. dollars, then that market's going to go from 250 billion to $1 trillion to 2 trillion to 4 trillion to 10 trillion. And you have to ask the question, who's going to be buying it? And the answer is people that might have otherwise had rubles or CNY or every African currency and every South American currency. So I think the weak currencies of the world are going to gradually be marginalized. I think that the dollar will grow. I think weaker currencies will be marginalized. I think that there are 400 million companies in the world, and there's 40,000 big banks in the world. So I think that, and of course there are lots of institutions. So I think that as Bitcoin is integrated into the fabric of the global economy, I think you'll see how about 1,000 banks that are actually trading peer-to-peer with each other. I think that the banks, the custodians, megacorps, I see a world where every major bank and every major tech corp, maybe a Google and an Apple and a Microsoft, they're all settling or moving large amounts of Bitcoin around on the base layer. Governments, you would think that the biggest users of the base layer would be Apple and Google and the US and Bank of China and Bank of Russia and Bank of England. I mean, to the extent that any of those things exist, right? If the nation exists, if the bank exists, you would think that Citi would be moving billions of dollars of Bitcoin to B of A, to Wells Fargo, to Santander, to Deutsche Bank, to Swiss Bank, to Bank of Japan. I would think that Microsoft will move billions and tens of billions of Bitcoin between Microsoft and Google in order to work through some, technical issue. I think I think Visa and any of the payment networks, they'll have massive amounts of Bitcoin. So I think that if you're actually an individual and you're using Bitcoin right now, you're one of the early pioneers. If you keep it, you'll be insanely rich. If you take money off the top or you sell it, then you'll remember that you used to have billions of dollars of Bitcoin, but you sold it for Ferrari, and that will be unfortunate. But and so I think that there'll be some OGs that will still be heavily engaged. But I think ultimately, the base network is going to have 10 to 100,000 big financial institutions that are going to be settling large amounts. And I think the network's going to scale in the layer 2s and the layer 3s. I think the Lightning network is going to end up being a high speed, high frequency, lower value settlement network that will stitch together 100,000 or 1 million websites or 1 million mobile apps. Or you could imagine everybody with a mobile app that has payments built in. At some point, they might go peer-to-peer. They won't do it on the base layer. They'll do it on an open protocol layer 2, most likely. And then there'll be like massive competition between Coinbase and Cash App and all the traders and the banks and the high frequency, traders and the next person running MasterCard or Visa, and they'll try to create these layer 3s. Mm-hmm. And they'll have a layer 3 protocol, and maybe Binance wants you to move it on Binance, and Visa wants you to move it on Visa, and Coinbase wants you to use their network, and Cash App, and then Microsoft and Apple Pay, and all these other tech networks. They'll be layer 3s, and if 1 billion people trust Apple, with their credit card, maybe 1 billion people will trust $10,000 worth of Bitcoin to Apple. And then maybe there'll be some successor to Apple, right? Like Tesla bot or something. So I think that there'll be a huge amount of transactions, billions and billions of transactions a day, probably billions an hour on the layer threes, probably billions a day on the layer twos. And then you're going to have the same number of transactions, on the layer one, far fewer. And those will be $100 million, billion-dollar type settlements, between the mega institutions. And I think you'll probably see Bitcoin security and Bitcoin credit type ideas built into a lot of financial and technical applications. And there'll be new applications, new use cases that we can't even conceive of right now, that will maybe for cybersecurity or social security or something else that will grease the wheels of digital commerce.
Michael Saylor delivers a powerful message to current Bitcoin holders. If you're using and holding Bitcoin today, you're not just an investor, you're a pioneer. He stresses the once-in-a-lifetime opportunity this moment represents. Hold on to your Bitcoin, and you could become extraordinarily wealthy. But selling too soon for short-term indulgences, like a flashy car or quick profit, could lead to deep regret. This isn't just about holding an asset, it's about understanding the massive shift in global capital flows that's already underway. At the heart of this shift, Saylor points to one of the most underappreciated forces in the market: Bitcoin treasury companies. These are traditional public companies, like MicroStrategy and MetaNet, that act as gateways for institutional capital to enter the Bitcoin ecosystem. Since pension funds and retirement accounts are often restricted from holding Bitcoin directly, they can instead invest in companies that do. This opens the door for trillions in equity and credit capital to indirectly flow into Bitcoin, creating sustained, institutional buying pressure. Saylor believes we are witnessing the beginning of a global recapitalization, where hundreds of trillions of dollars in the equity and credit markets begin to align with a Bitcoin standard. This movement, he says, is the real driver of long-term adoption and price growth. Failing to recognize this trend, whether as a retail holder or an investor in Bitcoin-aligned companies, is the second major risk he warns against. Let's take a look at clips from his interview for a deeper dive into his insight.
I think the most exciting thing going on right now is the issuance of BTC-backed equity and the issuance of BTC-backed credit. Because, you're talking about $100 trillion of equity and credit that's discretionary. So if I were to say every public company should recapitalize on Bitcoin, that would be a start, but that would be an understatement, because I didn't include the 400 million private companies, did I? And I didn't include every institutional holder of any capital. So I think that that's a very powerful dynamic. And once that starts, that burns 100 million a week per company, a billion, that can burn billions, and that could be billions of dollars a week. And and the same with BTC-backed credit. If you look at all the credit instruments, all the preferred stocks, all of the fixed income, all the annuities, all the corporate bonds, all the high yield bonds, the junk bonds, all the investment grade bonds, all that huge amounts, it's all going to be recapitalized or reconstructed on a Bitcoin standard that's bigger than the equity. And so I think that there's a digital transformation of the capital markets going on right now, and it's profound. And what it means is a company like Metaplanet can go from being worth 10 million to being potentially worth 10 billion in a couple of years. So show me a better idea. How do you go from 10 million to 10 billion in 24 months or 36 months? It's not very common. So I really think that's the part that's underappreciated. I mean, people in the business staring at it, like literally most of the crypto OGs that have been in the business for 15 years are staring right at the thing and ignoring it or rejecting it as it's happening. Right? That's the irony to me. So, and I think that's because, again, their metaphor is they're looking for some technical widget to create instead of reconceiving the way that wealth is stored. If you're looking for the technical ideas are just harder they take a lot more work. I mean, eventually you would think that Bitcoin is the basis for all payments, via something like the Lightning protocol. And so clearly the Internet of Money, that's a cool idea. It's a lot of work. It's going to take a while. And then I think Bitcoin is the basis of all identity and authentication. It's another interesting technical idea. Presumably, public-private key cryptography on a Bitcoin network, it ought to replace most of the forms of authentication and identity and verification in the world. So I think that those are two technical dynamics that are operating. But on the other hand, if you launch 100 companies with those two ideas, 99 out of 100 are going to struggle, and one will achieve something maybe. Whereas I can take a dying hotel or a dying restaurant chain and I can make it worth $1 billion just using Bitcoin as digital capital. And on the margin, it's more likely to work than not. So I think that the really big compelling ideas are the monetary ideas, or the financialization of Bitcoin, the securitization of the network. I think the technical ideas will probably come later. They will come. They're coming. David Marcus is doing a great job, with Spark, and Light Spark. I think it's very interesting, and they're having good progress, and I think we'll see a lot more things like that. But those are a little bit more difficult to forecast because of the vagaries of technology entrepreneurship. Every company, every family on earth should adopt the Bitcoin standard, right? What is that, 1 billion families?
Yeah.
Every person on earth should adopt the Bitcoin standard. That's 8 billion people. Every company on earth should adopt the Bitcoin standard. That's 400 million companies. Now your next question is, well, is there anything I can do that's better than that? Well, there are a lot of other twists to it. If you take a private company, take it public, right? You add value. Now, all of these companies are competing to do something. The issue is, what's the something? And it depends on the company. So I think we're very early. I mean, not even 0.1% of companies are doing this, right? So, I mean, if you're less than 1% adoption, you're still pretty early. There's a lot of different business models you can pursue. If you're a private company and you're raising $10 million in order to fund operating losses, you could just raise 50 million and buy 40 million of Bitcoin and fund 10 million in operating losses. And I would definitely recommend that. That's better, right? Mm-hmm. Right. So every private company can do that. Now the question is, can you raise the money? Okay, well, it depends on who you are and whether or not we like your company and whether you're trustworthy. So this all becomes an exercise in capital raising.
So what does this mean for you? Michael Saylor boils it down to two unstoppable forces, AI and Bitcoin. To thrive in your career, mastering AI is essential. It's how you stay competitive and create value. Financially, the strategy is clear. Raise capital and convert it into Bitcoin. Whether through low-cost debt or Bitcoin-focused businesses, Saylor argues that the long-term returns vastly outweigh traditional investments. Holding Bitcoin now could mean generational wealth. Selling early for short-term gains, he warns, may become a lifelong regret. His commitment goes beyond money, it's about legacy. Saylor plans to never sell his Bitcoin, seeing lost coins as a contribution to the network. Like Satoshi's inactive holdings, they increase scarcity and strengthen the system. For him, locking in his Bitcoin is an act of faith in a future built on digital capital. The clock is ticking. Fiat currencies are fading, Bitcoin adoption is accelerating, and treasury companies are unlocking institutional capital. Waiting for slow, passive adoption is a mistake. Those who act now, combining AI and Bitcoin, position themselves for the next era of wealth. Those who don't risk being left behind. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.